Hello and welcome to Money Markets and More on this frosty winter's day here in London. I'm back in the graveyard as you can see, and today we are going to talk geopolitics. Always a bit dangerous to talk about geopolitics from southeast London, but anyway, that's what we're attempting to unravel, because there have been some interesting developments in this murky world that I want to report on as the currency wars heat up. World War III is already here. That's what US economist Pippa Malmgren, who was Special Assistant to US President George Bush for economic policy, and she was a member of the President's Working Group on Financial Markets, that's what she says. World War III has already started. Here are her words. We are in a hot war in cold places, space, cyberspace, underwater, and in high places, including the Arctic, didn't know they were that high, and the Himalayas, in proxy conflicts in places the media gives a cold shoulder to, such as Africa, not to mention the Pacific. So it's a cold war in hot places and a hot war in cold places. And we're also, of course, the war she doesn't mention is the currency war, and that's a very hot war. And this week, with the aim of limiting Russia's ability to finance its war in Ukraine, the G7 nations, the European Union and Australia, set a price cap of $60 a barrel on Russian crude oil. And that follows the EU's embargo on Russian crude imports by sea. There's similar pledges from the US, the UK, Canada and Japan. And as you'd expect, Russia has said it will not abide by such price caps, even if it has to cut production. Meanwhile, the world's largest oil importer, China, seems to be slowly opening back up. Cities are easing COVID-19 restrictions in, partly on the back of all those protests I get, and it seems like the country's gradually relaxing its curbs. And I think it's fair to say that if China hadn't locked down, its oil demand would have been a lot higher. And so the oil price would have gone a lot higher. The sun's very low, so it gets very bright. And the same goes for most metals, in fact, most other commodities. And then we have another part of the puzzle. Vladimir Putin, Russia's president, sounded like a Bitcoin maximalist last week, as he was calling for an independent international blockchain-based settlement network. Spoiler alert, Vladimir, it already exists. It's called Bitcoin. These are Vladimir's words. The technology of digital currencies and blockchains can be used to create a new system of international settlements that will be much more convenient, absolutely safe for its users, and most importantly, will not depend on banks or interference by third countries. It's Satoshi Nakamoto. I am confident that something like this will certainly be created and will develop, because nobody likes the dictate of monopolists, which is harming all parties, including the monopolists themselves. I mean, it's straight out of the Bitcoin white paper. And Vladimir, in case you've self-Googled and you're watching this video, click on bitcoin.org, and that's where you'll find out more information. So where is all this going? And I've got a few ideas, and so does Credit Suisse's answer to Led Zeppelin analyst Zoltan Pozsar. He's the sort of rock star of analysts. Here's what he has to say. The oil market is tight, and the oil price, he agrees with me, is lower than it might otherwise be, not just because of China lockdowns, but because of the US release of its strategic reserves, and because of the OECD countries. But Saudi Arabia is now low on spare capacity, and the strategic reserves, the SPR, are finite. Recent releases have brought reserves down to levels we haven't been at since the 1980s, he said. There are 400 barrels left, and that isn't much. It can help police prices for a year if you released 100 million barrels per day, half a year if you released 2 million barrels per day, 4 months if you released 3 million barrels per day. So short of a sudden new surge in supply, where's that coming from, or a sudden reduction in demand, it would seem then that with China opening up, the oil price would go higher. Now, Russian crude already sells at a $30 discount relative to Brent, which is currently around $80, $85. And China and India are the main buyers. In the case of India, it is, now these are Pozard's words, it is widely understood that Indian refiners are turning some of the imported oil into diesel for re-export. Buying Russian crude at $60 a barrel, selling diesel at $140 a barrel makes for a nice crack spread, the petroleum market's equivalent of 100 basis points of spread in the land of OIS cross-currency bases. India and China thus serve as matched book commodity traders, like Glencore or Trafigura, the former dealing in oil and the latter in LNG, keeping commodities in circulation. Now, Russia may be happy to sell to India or China at that $30 discount, but Putin will not cap prices to sell to Europe on point of principle. Meanwhile, America, United States, needs to replenish the SPR, its strategic reserves, especially if it wants to control domestic oil prices. Gone are the days when the US Deputy National Security Advisor, says Pozar, warned India and other countries of sanctions if they bought Russian crude oil. And that change in tune could be one backdoor mechanism to refill those reserves. But given the $30 discount that India is paying for Russian oil, this would be around President Biden's $75 target. But if Russian oil is exported for the purposes of replenishing the US SPR, Putin is not going to like that either. So what to do then? Only accept payments in gold, says Pozar. Not dollars, not rupees. Now, does that sound a bit fantastic? No, it is not, he says. Look at the tit-for-tat measures so far. You invade Ukraine, I freeze your FX reserves. You freeze my FX reserves, I make you pay for gas in rubles. The West boycotts my Urals, I'll ship it east. The West caps the price of Urals, let them, but I'll make them pay in gold. And if some countries re-export Urals to the West, I'll make them pay in gold too. Now, as I say, anticipating geopolitics from southeast London is probably not wise. The pub is a much better location than my desk or this graveyard. But I've long since argued that the refinancialisation of gold is the most powerful weapon there is in the currency wars, particularly anti-West, and in this Eurasian move towards de-dollarisation. But the problem with gold is settlement. You can't send gold over the internet, so you have to use banks or gold dealers. If only there was a form of money that you could transfer from A to B across the net that eliminated the need for trusted third parties. Oh, there is! Sorry about that, I got cut off, but that's pretty much all I have to say. As always, if you're interested in buying gold, take a look at I'll put a link to the Pure Gold Company, who I have an affiliation deal with. And just a couple of other things. If you're looking to buy Christmas presents, I've got lots of CDs for sale. CDs of Kisses on a Postcard, my musical about Vakis in World War II. I'm more proud of that than anything I've ever done in my life, ever. And that is no small understatement, and it makes a wonderful present, particularly for anyone who was affected by the evacuation. They will thank you if you buy them that CD. I promise you, there aren't many of them left. And also, there are lots of CDs for sale of my comic songs. They're good stocking fillers, good to hand out to errant people at work or people with errant views. And everything is available at dominicfrisby.com/shop, and I will put a link in the description below. Thank you very much for watching. Please subscribe to the channel. I will be back with another video very soon. Oh, and one more thing. December the 16th, this Friday, Comedy Unleashed, me and the Gilets Jaunes, full live show. It's going to be a 2-hour show. We've also joined by brilliant jazz guitarist Todd Sharpville, blues guitarist. It's going to be a great the Comedy Unleashed Crispus Knees Up in Camden. I'll put a link to that in the description too.